Kia ora, welcome to Shared Lunch. Ko Brookaho, I'm Brooke Roberts, one of the co-founders and co-CEOs at Sharesies. In this episode of Shared Lunch, we're diving into EROAD. We'll be joined by the co-CEOs, Mark and David, and they're going to tell us about EROAD, its future, the current earnings and results that they just published, and what their product is and how it works. Please stay tuned for that, but before we get started, here is some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Kia ora. So great to have you both here. Thanks so much for coming along and talking on Shared Lunch.
Happy to be here.
For those investors who are listening who may not know much about EROAD, can you give us a bit of the elevator pitch?
Yeah, happy to do so, Brooke. So EROAD, we're really in there for looking after our companies around health and safety, sustainability and efficiency. So we developed a few years ago this great device, sits inside the vehicle, tracks what's going on with the driver, the vehicle, the load, and then we help drive great outcomes. So we save lives, we reduce speeding, we reduce carbon, and then we also help monitor compliance activities too for our customers.
Fantastic. And so you said you've been going for a few years.
Yes.
How many years, David, has EROAD been going? And what do you see as the kind of future opportunities within the space that you're
Sure. So we started back in 2000, so
Yeah.
quite a long time we've been in the market.
Yeah.
Where the market's going right now is when it really started off was about dots on a map. Where's the vehicle? Then came along analytics, which would say, okay, well, what happened, on this trip, and what can we learn from it? And now we're in an exciting world of AI, where AI is trying to solve not just what happened, but how to prevent it from happening again, or how to take more advantage of it next time if it's a positive.
Yeah.
So it's really about AI right now, and we're really excited about that.
Yeah, I think a lot of CEOs of tech companies at the moment, AI is a real... Well, actually, for most people in the world now, it's at our fingertips. I remember when we started Sharesies, we'd be getting asked, how's AI or blockchain in your business, But now it's ingrained naturally. But can you tell me, Mark, a bit more about how you are leveraging AI as a technology and how you'll be at the forefront of the change that's coming?
Absolutely. So for us, we use AI in a couple of different ways. So we've got customers in the construction industry, also refrigeration. So what we use AI for is do predictive analytics, knowing what's going to happen before it actually happens in real life. So we can say, look, that trailer's going to break down, so you should service this first. Or we're looking at construction around, hey, how to get more loads out of each vehicle each day. That drives better outcome and productivity for the operator and saves them money in the long run. So we're looking at how we can produce more efficiency into vehicles. We're also looking at AI cameras too. So see what's going on the roads, predicting going to be accidents, where sort of trouble spots are going to be, telling the driver how to operate and be safer in the vehicle. So we use those sort of applications in our business.
And then with the potential rise of robo-taxis or
Yes.
autonomous vehicles, how do you see AI playing a part in...
Look, it's quite interesting. There's been a lot
Everything.
talked about autonomous vehicles and where it's going to go. From what we're seeing right now, the technology is just not quite there yet. So in transportation in particular, that's where we focus. Lots of heavy vehicles. You kind of want a human in charge to make sure something doesn't go wrong. So there's a lot of sci-fi, a lot of thinking about autonomous vehicles, but the technology is nowhere near what it needs to be safe on the roads at the moment.
Yeah, no, fair enough.
Yep.
Especially with those big loads, eh? So tell me about how EROAD makes money. Where does your revenue come from, and where do you see the biggest kind of revenue opportunities coming from in, say, the next 2 years?
Sure.
Well, sure. So obviously we have our boxes, the telematics actually go in the vehicles, and we either sell them outright or we lease them to companies. On top of that, we layer on software that leverages the AI and analytics that really helps our customers understand how to optimize their operations and keep their loads safe and their drivers safe and all of us on the road safe. And around that, we also have professional services where we help our customers better integrate all this technology into their enterprise systems. So that's really sort of like the three different areas that we play in. We also have channel partners who also take our products and services to market as well.
So in terms of your revenue, like what percentage comes from each area, and how do you see that kind of changing?
Yeah, I mean, right now, over 90% of it's coming from the software and the telematics.
Yeah.
The ancillary services around that, while it doesn't make up a large part of our revenue, it helps deliver a lot of value to our customers. And that's why it's so important that we have that piece of our business.
Yeah, that makes sense. So you just released your recent results. Can you give us the rundown of those? What are the highlights in your results,
Sure.
and also what are some of the challenges you're facing?
Look,
too?
we're hugely happy by our results.
Yeah.
So what we saw over the course of last year is we grew revenue by 10%, $182 million. We beat the market expectations around 180, so we're happy about that. Annualized monthly recurring revenue, which is a really important metric for a SaaS company, that grew by 15% to $177 million. We were free cash flow positive for this year, which is wonderful. For a technology company, it can be quite challenging, particularly one like ours. As David explained, we lease units to customers, so we incur the costs up front and realise that over the time. So we do burn quite a bit of cash, so being free cash flow positive is really important for us. And equally, we keep customers too, so our churn rate is around 5%. So during these tough economic times, our customers are sticking with us because they know we take money out of the cost out of their business. So we're really happy by our results this year, and we're looking forward to next year growing revenue again, maintaining being free cash flow positive, and looking forward to growing profit as well.
Nice. And David, as you look into this year, what do you think is the biggest challenge you're facing into?
I think right now we're trying to break our biggest market is North America. It's a $10 billion TAM. We're trying to break in there. Here in New Zealand, we're a household name. We're well established. Now we're in a very saturated market, a very exciting market, and it's really making sure that we get our solutions in front of these large enterprise customers. And how do you do that with, we'll call it a limited marketing budget? We just need to be a lot more laser focused in our messaging to these large enterprise accounts. So really, it's just a matter of how fast can we scale in North America? And that's really what I'm tasked with, and that's the challenge.
And who's your biggest competitors over there?
Our biggest competitors are probably Geotab and Samsara in terms of sheer size and branding. But we really don't compete with them so much in the markets where they play. They play a lot more in the light vehicles or on the SMB customers. We're trying to stay very laser focused on large enterprises where all those ancillary wraparound services that we provide are so critical to their success. And then, of course, we have a very differentiated offering in cold chain, which is refrigerated trucks, and then over on construction that Mark talked about earlier. So we really stand out in those areas. We have a lot of value, and our differentiating value proposition is pretty clear. So it's really just about getting out there and finding the quickest way to market.
Okay, cool. And, retail investors will be interested in the takeover and what happened there with the bid from Constellation for $1.30 per share. Can you tell us a bit about what happens behind the scenes there, why it was rejected and what you see as a path forward?
Absolutely. So whenever a board receives an offer like that, they've got to take it really seriously. So they looked at what was offered to the company, and then they compare it to our long-term future around what the true value of EROAD is going to be. So we looked at that with investment bankers involved as well to look at our budgets, our forward growth profile, and they assessed that, look, over the long run, that value is significantly undervalued what EROAD's long-term value is going to be. So the board discharged its obligation to shareholders, looking at it really seriously and said, look, thank you, but we believe that by being an independent company, we can realise more shareholders. And a great proof point of that was our results for this year. When we look at the revenue growth, look at being free cash flow positive, those are all key things investors want to see, particularly for technology companies. So the board made the right decision to say, look, we're good on our own right now, and we're good about our growth profile going forward.
Yeah, and then do you anticipate more offers like that in the works, or do you think you've, sent a signal?
Well, we believe there's still a lot more value to be realised in our share price. So, at the moment, our share price is increasing, which is good to see. But it's on us, David and myself, to really continue to grow revenue, and then the share price will grow off the back of that too.
And talking about that growth, you've got 500 or so members in your team, the majority based here in Aotearoa, 100 or so based in the US. When do you, and you're listed on the New Zealand and Australian Stock Exchange, when do you feel like for EROAD's success and for the future that it will flip to an American company, or to that, given the big growth opportunities there?
So we're a really proud Kiwi company. We started here. We're our first company in the world to introduce a nationwide tolling system like we had. And so this is our home. But what I've been really deliberate on over the last couple of years is moving the centre of gravity more and more to North America. Case in point, bringing David into the team, being co-CEOs now, having a senior executive in New Zealand and a senior executive in the US to make it clear that we have a foot in both camps. We also recently appointed another director in North America. So half the board's now North American, half the board is Kiwi as well. So we're having a bit of a bob each way. We love being in New Zealand. We love being a New Zealand company. We love our Kiwi shareholders here. But we see a massive growth opportunity up in North America. David mentioned a $10 billion total addressable market there. Is $500 million in New Zealand, so we need to be focusing there in the long run around our growth. That being said, there's still lots more growth to be done in New Zealand too. We keep targeting more and more, and as we find, every year we grow between 8,000 and 10,000 connections in this market.
Yeah, we see. Do you have any companies that you want to emulate when you look at your growth in America? We have seen some New Zealand companies make it. You know, it is a really tricky environment, and I do want to touch on regulation and government differences too, but we'll come to that.
So we talked to Xero. I mean, Xero's done incredibly well in North America, and they're doing what we were doing in a sense that you can't go to North America and be everything to everyone. And EROAD tripped ourselves up back in the day when we first started in North America. We thought we could take a New Zealand model, do everything in the telematics vehicle industry, and take the model to North America. It doesn't work that way. So like Xero, we're focusing on niche areas where we've got a competitive advantage. So as David was saying before, we focus on cold chain and construction and also in large enterprise fleets. So although we've got competitors there, we believe we've got a competitive advantage in those niches, and we're going to focus really hard on there so we get a better return on our investment.
And one of those niches is probably bigger than the New Zealand
Exactly right. So case in point, last year we won Cisco Foods. They're the world's largest food services company, $76 billion turnover, which is half New Zealand's GDP. And so we won them. It's 10,000 connections with them alone. In New Zealand, we typically grow 10,000 a year. So there we go. Winning one customer is the same as winning all of New Zealand in a year.
Yeah. The scale is just massive. So I'm really intrigued on the regulatory side and the differences actually between operating here in New Zealand and also in the States. I can imagine there's obviously different legal regimes and different types of practices and different personalities. What do you notice in terms of the differences in terms of how regulation or how the government interact in your spaces and how that impacts your business?
Sure. Want me to go for that?
Okay.
So New Zealand is quite prescriptive,
Yeah.
how we sort of go about doing things, and quite slow, to be fair.
Yeah.
So we find this market, we've got to work very closely alongside government to help develop opportunities here, whether it's in health and safety, sustainability, or in tolling of roads. So we worked with ECA around sustainability. We worked with WorkSafe NTTA around health and safety and tolling. So you've got to work really close with them and show them what their future looks like and help guide them. In the US, they take more of an outcomes approach. They say, this is what I'm going to do, but these are the outcomes we want, which kind of gives technology companies a bit more freedom about how to get there. And so it's quite a different way of doing things, but we need to be able to be doing both really, really well. And so for us, we've built great products up in North America, which are wonderfully adapted to the market up there. And we've done so in New Zealand too, but we've had to go different ways about doing so based on the markets.
Yeah. And, locally, we've seen Infrastructure New Zealand talk about, putting the government like electronic road monitoring within every EV.
Yep.
What's your thoughts on that? And
look, we're hugely excited by that. One of the key reasons EROAD was started was we could see in the long run that as vehicles move from internal combustion to electric vehicles or even become more efficient, the fuel excise duty won't cover the cost of the roads. It's not just New Zealand, it's everywhere. So our founder, Stephen Newman, thought we should do a nationwide tolling system using ERUC. We've been incredibly successful here. And now we're seeing the government say we want to do that for light vehicles as well. So we, again, are talking about how we can use EROAD to enable that. And so we see over the course of the next couple of years some tremendous opportunities for EROAD to be able to get our devices, alongside no doubt our competitors too are quite keen as well, their devices into light vehicles and help do tolling, congestion charging, road user charging, and it's going to be a far more effective way of paying for the roads. We've also been involved in pilots in North America and Australia too, so we've shown them what you can do in those markets as well, because we see the whole world at some point evolving to that model.
Okay, interesting. And do you see a potential competitor or already where the manufacturers of the vehicles will just put this technology within their fleets?
Yeah, we do see that, but if you really look at the mix of our accounts, very few of our customers are really staying with one OEM. So they have mixed fleets. So they still need our solution to sit on top of all the telematics that are being built into the cars to give them those analytics and the data that they need to run their business. So that's number one. Number two, these are very massive fleets. It's going to take a long time for them to actually turn over their fleet to fully EVs that have those telematics. So with those two things going on, we see ourselves, positioned for success for the foreseeable future, and we're not really bound on the hardware itself. So we're looking at options of, getting away from the hardware in the sense where the OEMs are putting it right into the vehicles, or also possibly white labeling other technology out in the market, because the real value we're delivering is around our software.
Exactly right. And on that, the likes of Teslas of the world or other companies, they don't want to build a road user charging software for New Zealand. We've already done it. So we look to work with them. It's how we can put our technology onto the vehicles, as David was saying. So we still see a future with connected cars that will still be there providing the regulatory overlay for them.
And are there any privacy concerns, say every EV did need this technology and you're there and you've got the cameras facing the driver and, are there any privacy concerns that people should be?
Look, privacy is absolutely critical to us. So we take a really serious approach to privacy. So we hold data with a very secure system. We can delete data as well where required, and we make sure the government can't access it. So there's a good barrier between us and the government, and so we think that's really, really important to do so too. So having the right safeguards in place is critical to make sure that it's well looked after and others can't get access to it.
What do you have ambitions around the data that you do receive in that space, and can you give some insights in terms of what?
Well, the great thing is we can see what's going on the roads. We've got 120,000 vehicles in New Zealand right now that use EROAD, over 100,000 in North America. So by doing so, we can see things around who uses which sort of roads more. We can help provide network planning purposes as well. So we can say, look, you should build over here, not over there. And then in the future, as we have more and more vehicles connected, we can start giving smarter insight around where your journey should be. You should go this way, not that way. And particularly if we can integrate with public transport, which is the next sort of horizon we'd love to sort of see, we can say to a person, hey, perhaps rather than taking your vehicle to the airport today, maybe take public transport instead, and this is the best way you can do so. So the more data we can utilise, the better the applications and outcomes we can give to customers.
Ultimately, more efficient transport and reduce carbon emissions.
Exactly
in
right.
the long run.
Which is particularly important given that transportation is 20% of New Zealand's carbon footprint. It's critical that we get that more sustainable.
Yeah, cool. And you both are co-CEOs. You joined in November, officially since March. How's that for you, David? Coming and joining in and from the US too.
Yeah, well, first of all, Mark's fantastic, and all the e-roaders are so much fun to work with. The company is on such a great trajectory right now. So you just, the excitement's palpable just walking the halls. So it's a lot of fun, especially when I get to come over here, be in our office up in Albany, or when I'm out in our San Diego office. Just a lot of excitement. So from that perspective, it's been a lot of fun. From an operational perspective, I'm surprised how great it's working. Mark's really focused on innovation. And also operational excellence, where I'm really focused on strategic expansion and moving into markets and customer. Together, it's really complementary. And what's also working out really well is by us being in different hemispheres a lot of the time. One, it cuts down on some of our travel a little bit to the other side. And two, it allows us to be near our customers and near our employees. So it's really a force multiplier. And it's an exciting model. And I know you have a similar model with your organization. Yeah. But I couldn't be happier with the decision to join, and looking forward to another great fiscal year ahead.
Nice. It's nearly like a 24-hour CEO given the different.
Well, what I love about it is we can bounce off good ideas, but you can run the business faster ultimately, right? You don't have to have all decisions go to one person, and it can be a bottleneck. So David's great at getting decisions made and so forth. I can bounce ideas off him, likewise with me, and we can just get the organisation moving faster. Yeah. And what we're seeing is the whole organisation just moving at a faster rhythm now, which is better for our customers, makes work more fun as well, to be honest. So really enjoying it.
We found the same. So there's 3 EOs here at Sharesies, and the speed that we can execute, and because we have high trust amongst each other, we know when someone can make a decision, and actually we should both make this decision.
Yep.
But that shared load, and you have lighter shoulders at the end of the day when you get to make the decisions with somebody else's brain around it. So I'm a big fan of the co-CEO model if it works well for the company and the kind of, not egos involved, but the way that that you kind of
I mean, I think there's 2 key points. I mean, one is it's got to be the right person, and David's such a wonderful open person who challenges me, and likewise. So we spend quite a bit of time together with each other first to say, will this fit well? But secondly, you've got to look at the business as well. And one of the reasons I was really keen on this is, as a Kiwi business trying to break into North America, it's really, really hard, to be really frank. It's hard for Kiwis to know truly what the American psyche is like, the sales culture and so forth. Having somebody on the ground who's lived it, breathed it, knows it, makes a lot of sense. So hugely exciting.
So, in a year's time, High Tech Awards rolls around again. What do you want to be sitting here talking about?
I'll let you go with this. That's a good question.
Look, for me, is we've made commitments to the market around, hey, we want to be cash flow generative, making more money. We want to keep growing our revenue, and we want to keep innovating. So for those, hold us accountable to those 3 things, and we believe we're going to deliver really well for our shareholders. So those are 3 things I'm focused on, and no doubt we can deliver on that and make our shareholders really happy.
Awesome, and no doubt we'll come back and discuss those 3 things.
Indeed.
Is there anything that hasn't been said that you really want retail investors to know?
Yeah, I just think, look, this is a really exciting time in this market. It's a relatively new market. I mean, when you're talking about technology, it's only been around for a couple decades. That's actually kind of still cutting edge new. Now with AI coming into the space, the focus on a sustainable world, a safer world, a more efficient world, we're right at the forefront of that. So I'd ask people, take a look at what we're doing, take a look at what our customers are saying about us, and maybe even think about joining us. So.
Cool. Hey, thank you so much, both of you, for your time today.
Thank you for having us.
Yeah,
Thank
cool.
you.
No, thank you. Thanks so much for tuning in. You can watch Shared Lunch on YouTube, and you can also listen to us wherever you get your podcasts. Please do leave a rating, and if you've got any ideas of who you'd like us to talk to next, please do leave a comment and let us know. Until then, ka kite anō.